to the Mortgage Rate Weekly Market Update for the week of September 17th, 2018. Hello, I'm John Thomas with Primary Residential Mortgage to give you an update. Well, last week, mortgage rates did move higher. If we take a look at the bond chart, you can see the short-term trend now is for mortgage bonds to sell off, which has been moving mortgage interest rates higher since the end of August. On last week, we did follow through on the sell-off from the jobs report, continued to sold off. We did hit a floor of support, as you can see there in that red line, after breaking through a couple others. So that's going to be important to see if that can hold. If that floor of support cannot hold and mortgage bonds sell off, break through that, it's going to keep getting worse. So with the short-term trend being for mortgage bonds to sell off, mortgage bonds having a tough time finding a good solid floor of support, we're going to recommend locking in your mortgage interest rate to start the week. Take advantage of whatever rate you got, because it could get worse before it gets better. Now, if we dig into the economic news, in world economic news, there's been no new developments on the China-U.S. tariff issues. However, we are seeing signs that China's economy is slowing, which could help further the negotiations, because it looks like some of the tariffs that we're putting in place could hurt the economy in China even more, and it's already slowing, so they're going to be more amenable to renegotiating some of the trade tariffs that they have on our goods, like we're putting on theirs. So China's stock market, the Shanghai index, is down 20% in the last year and is in bear market territory. So that doesn't bode well for the economy. So this pain could be lifted by China striking a deal with the U.S. So we'll have to see how that plays out over the next couple months. Now, in United States economic news, we had retail sales report for August 2018. It disappointed at only 0.1% increase from the previous month, well below expectations of 0.4%. However, July retail sales was revised higher from 0.5 to 0.7%, which shows consumers spent more in July and held back in August. Now, on an annualized basis, retail sales are actually up 6.6% from August of 2017. So that's good. Economy's humming along. Just we're a little disappointed with August. We'll have to see how September plays out with back-to-school shopping as we move into some of the holidays coming up. Now, retail sales is a measure of the total receipts of retail stores and the most timely indicator of broad consumer patterns. So if we see that retail sales are down again next month, that means we could see a shifting economic pattern, because we've been having good economic growth, good consumer spending. So if this is a one-off, no big deal. But if it's next month in September, if we see it down again, we'll have to start checking to see if we're starting to see a new pattern emerging. Now, we saw two readings on inflation last week. We saw the Consumer Price Index, or CPI, for August, which measures consumer inflation, rose 0.2% from July and fell year over year from 2.9% to 2.7%. So one of the fears has been inflation heating up, so it's actually starting to cool off. That's good news. So that was bond-friendly information. The lower inflation data could mean the Fed slow their pace at which they're hiking the Fed funds rate. So instead of hiking in October now, they may delay to December based on inflation cooling off. Now, we also saw lower inflation on the wholesale level with the Producer Price Index, or PPI, for August 2018. It fell 0.1% from July, and year over year it dropped from 3.3 to 2.8%. Which is good. So inflation on the wholesale level, which doesn't always pass directly on the consumer, that is falling, and consumer inflation is falling as well. So that is all bond-friendly news. Then we saw weekly initial jobless claims come out on Thursday. Claims came in at 204,000, which is down 1,000 from the previous week, which was revised higher from 203 to 205. So again, initial jobless claims at record lows we haven't seen since the 1960s. Means employers are holding on to good employees and having a tough time to find new employees. It's a very tight labor market, according to weekly initial new jobless claims. In the week ahead, we've got housing starts and building permits on Wednesday, so that's going to give us a good reading on home builders and new home construction. We've got existing home sales on Thursday, so we can see what's going on the resale market. Inventory is still low, so we would be shocked to see some really good numbers come out of that, because if we got buyers, it's just harder to get them under contract when you don't have the inventory. So we'll see how that comes out. And then we got weekly initial jobs claims on Thursday. Now, if we switch over to the housing news, if we look at the home price index for the last year over year, and we look at the local market here, Delaware is above the national average at 7.72% home price appreciation. That's amazing. Delaware's been lagging the country. Now we're one of the leaders. We're above the national average. If we jump over to Maryland, it was 4.99%, which is slightly below the national average. Pennsylvania, 5.21%, and New Jersey, 5.15% in the local region. So the national average home price appreciation over the last year was 5.6%. This means real estate is still a great investment. 5.6% national home price appreciation is very good, very sustainable. That's where we want it. We don't like to see it much higher than 5 or 6% because we know it can't keep going like that. So that's great news on home price appreciation. So if you own a home, great news. If you don't own a home, another reason to get out there, get under contract, buy a home so you can start taking advantage of the increase in home prices once you own a home. That'll build wealth for you. Now, if we jump into the local news, we got some first-time homebuyer seminars coming up in Delaware. We got one this Saturday, September 22nd, 10 a.m. to noon in Newark, Delaware at the Christiana Hilton Hotel. And then we jump to Wilmington on Wednesday, the 26th, from 6 to 8 p.m. at Independent Small eXp Realty office on Route 202. And then we end the month in Dover on Saturday, September 29th, at the Dover Holiday Inn from 10 a.m. to noon. You can register for either one of those events by calling us 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Now, we also got one coming up in Maryland. It is Saturday, October 27th. That's in Hyattsville, Maryland, from 10 a.m. to noon at the College Park Marriott Hotel. You can register for that event by giving us a call, 410-412-3319, or online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.